Good morning, friends. Welcome back to the Ronnie V Show. Welcome back to Stocks with Ronnie. We are going to talk about so many things today. You are not even prepared for the amount of things we're going to talk about today. But first, we have to talk about, let me turn this fan off. We have to talk about one specific company. We have to talk about one specific company that is just getting absolutely decimated today. I'm talking about PayPal. PayPal is absolutely getting wrecked today. Down 17%. Let's move this around. Down 17% and just fired their CEO. I think they missed on their earnings. We're going to go over their earnings. They were not good. Their revenue growth is down. Let's see. PayPal stock dropped 15% to $44.23 in pre-market trading after Q4 earnings missed expectations, reporting EPS of $1.23 and $8.68 billion revenue. And then they named Enrique Lorez as CEO starting March 1st, replacing Alex Chris. You fire your new young CEO that came over from Intuit, which was a hot shot. He couldn't get the job done after like 4 years. I think it's over. I think it's over for PayPal. Everybody drop in the chat where you're watching from today. I want to hear from you. I want to see where you're watching from. I want to see what you're doing. What's up in the chat? What's up, Ivan? Very sad. It is scary. According to Tom Lee, if a company misses earnings, then analysts are not allowed to rate it as a buy for 3 quarters or something like this. I don't think anybody should rate this company as a buy at all. I had my problems with PayPal whenever PayPal sat there and held my money hostage, and they said, oh, we might give it back to you in 6 months because some rules were violated with their secret rules and secret squirrel stuff. Even though I did nothing wrong, I had a business account with them, and it was part of like a payment processing for my Discord or something like that. And then somebody asked for a refund, and then because someone asked for a refund, oh my gosh, there they go. And what do? They hold my money. They lock out my account. And then I posted on X about this. And then everybody came out of the woodwork talking about how PayPal did the same dang thing to them. So, wow. I mean, come on. They're locking people out of their own money for up to 6 months? Come on now. You can't run a business like that. Ridiculous. Let's talk about the numbers. The numbers, atrocious. Net revenues increased 4%. 4%? We're turning the ship. We're getting back in the right direction. We're going to get back to double-digit revenue growth. 9, 8, 7, 6, 5. Now 4%? Get out of here. You're overvalued. PayPal is overvalued. 3% on FXN, which is terrible. FXN is typically like way more. FXN is typically growing at a way faster clip. What's up from Austria? What's up, YZ? What's up with Zeta this morning? Golben? What do you mean, what's up with it? Is it up? Last I checked, it was up. Down. I don't know, friend. Looks like the markets are coming down. Look like the markets were up and now they're coming down. QQQ, mixed. SPY, mixed. IWM, slightly up. Let's see. AMPX up 11%. Y'all been sleeping. I've been talking about that one. Been calling that one out. Iren's up, Adobe's down. Pagayo and Delo are down because of freaking PayPal. Go figure. Way better businesses, way better business models, but they're down because of PayPal. Zeta and Path are both getting crushed. It looks like SAS is just getting crushed again. Maybe you probably had earnings. You probably had some earnings for some. Let's see. Where are these earnings at? Where the heck are these earnings at? I never use the why they hire Enrique? No clue. Poor Enrique. He's got a lot of work to do. Dude, where are these earnings at? Sometimes I cannot stand TradingView and how it's not just simple. Too many things. Earnings. Where are the there it is, calendars. It's just me. User error. Let's see. Today's Tuesday. Yeah, it's Tuesday. Market caps. Palantir crush, we know that. Walt Disney beat. I'm not seeing any. Okay. Tuesday. Where's PayPal? There it is. Yeah, miss 4.45%. Who else reported? Merck, Pepsi, Pepsi beat. Chubb. I don't see any. ADM beat. Hubble beat. I don't see any reasons. Ron Amigo, would you buy a hood at these prices? What's hood at today? Let's talk about it. I was already buying at the other prices, so probably. If it's lower, probably. Down. Get down. Can't believe Zeta's down 3% off nothing, man. That's crazy. Now they're down 11% year to date. $89 for Robinhood. Let's talk about it. Yeah, I think markets are coming in. No, IWM's ripping more. Palantir up 7.5%. Oscar holding 14 like a champ. Needs to. Look, I'm bullish on Oscar long term, but I'll even say freaking pain in the butt. I think that's even. Yeah. It's pain in the butt. Okay. It's not its fault. Let's see. Robinhood. 23% year to date. Let's look at the charts. Let's run some charts. Again, how's everybody doing? If you're joining me live here, do me a favor, smash that like button. Do your boy a favor, smash that like button. If you want more live streams, if you want to stay up to date on all the videos I'm posting, including the one last night that I posted, top 5 stocks I'm buying in February, all you got to do, it's completely free. Hit the subscribe button. Hit the subscribe button on YouTube. Hit the alert button if you want to be alerted anytime I drop a new video. And that's it. Completely free. Another thing that's completely free, and I'll link it in the bio below, is going to be Blossom, the Blossom app. You can follow my exact public portfolio, the 6 stocks that I'm in, every time I buy, every time I sell, every time I trim, and my up-to-date, basically postings and information about those 6 stocks and possibly more in the future that I'm constantly buying and in my public portfolio. Again, that's on Blossom, and I will put the link right here. Give me a second. And I'm going to look at this one. Let's see. Maybe because Hood is software company? I don't think so. Nvidia sucks too. Nvidia might be coming down soon too. Hood is too much tied to crypto, and I think that's where the punish is coming from. Yeah, I agree. But it makes a better opportunity. SoFi or Hood is a better deal. I think Hood is a better deal right now. I think SoFi is just starting to fall. Yep, market's completely flipped. QQQ's down, SPY's down, IWM's down. Yep. That's what I'm seeing. That's what I'm seeing. Let me get you guys that link. Oh, yeah. It's funny. I just shared. If you type in, watch this, Pain Pal. It comes right up. It knows. It knows it. It knows it. There it is. Here's that link for Blossom, guys. Do you like SoFi? I like SoFi. I like the business. I like the business model. I just don't love it at these prices. Let's talk about SoFi. I posted on X about how this was a rounded top. You can see it clear as day, right? Let's see. Rounded top there. Roundeth, toppeth here. Zeta still falling. 2.6%. You notice how it falls and it snaps right back. It snaps right back. You know why? It's too good of a deal. It's too good of a deal. It's too good of a deal. AMPX up 4.5. It was up 10%. So market's definitely pulled back in some. I really like this stock. I really like this. You can see it's breaking out of this downtrend. It is pushing higher. We are curling up on the matrix. We are curling up on the prism. And we have an uptrend and we have a powerful move. Powerful move is the highest move you can get. And then we also had a flush out on the flow and curling up. AMPX, I like it. It was one of the top 5 stocks I was buying in February. One of the top 5 stocks I was buying in February. And then I'm continuing to buy. Looks really, really good. Looks really, really good. And you could see that on this video here, right here. Looks like 773 people got to watch it since last night. So top stocks I'm buying, AMPX, and why I'm buying AMPX, why I like AMPX is all in there. basically has to deal with drones. And also, we're at 4.8 thousand subscribers, friends. I cannot thank you enough for 4.8 thousand subscribers. But I'm going to caveat that with how fast can we get to 5,000? Let's get to that 5,000. If you're in here and you haven't done so yet, hit the subscribe button for your boy. Let's get to 5,000. Let's get to 5,000 so we can start planning ahead for the next 1,000. Okay. I'm delivering the content. I'm going live for you guys. We're talking about stocks. We're looking at charts. We're looking at value snapshot. You ask any questions you want, I'm going to answer them. Let's get it. Let's get it. And like the video too, so we get more people in this live stream. Let's see. Zeta. What's your Zeta price target end of 2026? I said $70 originally. That was a bit much. And I do believe it's very, very undervalued. Like 70 is not a far cry in my opinion, but I would say realistically, I was probably a bit unrealistic. I'd say realistically, right? So current price is about $18.38. The lowest analyst has a $25 price target. The median analyst, the consensus is $29, and the high is $36. I would put my end of 2026 year price. I would be shocked. I'd be shocked if Zeta wasn't $40 or more. I would be shocked if Zeta wasn't $40 or more. I would be sitting there saying, what happened to the markets? So right now, 36% under the bear case of the lowest analyst. So when did silver become altcoin? Once it ran parabolically like 300%, my friend. What's up, Denji? What's up, everybody else? If you're here, let me know. Let me know if you're here. Drop a hey, what's up? Ask me any questions you want. If you want to look at fundamentals, you want to look at technicals, let me know. Let me know. IWM is bouncing. Markets are bouncing. ONDS looking solid. Let's see if we can spin back up here. See if we fall down to $9. Good morning. What's up, NPS? I do like IREN. That was another one in the top 5 stocks I'm buying in February. I do like IREN. And I talked about that in that video, so go check that out. The matrix is curling up. We're about to get a bullish cross here. About to get a bullish cross. We are in an uptrend. We are in a wait. We do not have a powerful move yet, obviously, because we just pulled back and we kind of been choppy in here. We did have a flush out here, but we do have earnings Thursday. Thursday we have earnings. It could be big. Could be big. BTI. British American Tobacco. Okay, let's do it. Safety stock. Safety stock going ham. Safety stock going ham, my friend. What's up from Peru? What's up, Clayton? So you have a cup and handle. Why is it that color? Whoa. Let's see. Okay, there we go. We got a cup. We got a handle. We got a breakout. Measure and move is going to be right around 66-ish. So your measure moves up to around 66-ish, friend. Looking good. Looking good. All right, that's BTI. Let's look at these PayPal earnings again. So net income 4%. That's trash. Absolutely terrible. Let's see. 4% trash. 3% trash. Transaction margins increased 3%. That's trash. Increased 4%. That's trash. GAAP operating income increased 5%. That's super low. Remember, they're buying back shares like crazy. So what are they even doing here? That's trash. Should be growing more than 5%. GAAP operating margin expanded 19 basis points to 17.4%. Non-GAAP, that's okay. EPS increased 38% to 153. Non-GAAP EPS by 3%. I don't know how the gap increased so much and the non-gap increased only 3%. I don't like that. Zeta, $18.28. Love it. I think anything under 20 bucks is a steal. Doesn't mean it can't go lower. I don't control the markets. I don't control narrative. Net revenues, full year financial results. They only grew 4%. They only grew 4% revenue. Terrible. Terrible. TMS 6%. That's also trash. Gap operating of 14%. 9% on non-gap. That's trash. You're buying back so much stock right now. You should be growing way more, way faster. See their operating results. Trash. Cash flow 2.4 of 2.2. Adjusted. It's not the greatest of cash flow, honestly. Debt total 11.6 billion. Too much debt. Cash total 14.8. So good thing they have more cash than debt. But geez, a debt loaded company like this and they're growing revenue so slow and they're decelerating like crazy. Oh my gosh, now they got a cash dividend. Trash, dude. Trash. Oh my gosh. Your revenues are decelerating like crazy. You can't catch a bid no matter what you do. Then you come out with 4% revenue growth and you only grew 4% revenue growth for the entire year of 2025. Then you fire your CEO. You've been buying your shares back like crazy, like your Apple or something. And then now you're going to declare a dividend when you only got about 3.2 billion more cash than debt. Only about 3.2 billion more cash than debt. Your revenues are dying. You're buying back shares like crazy, and now you're giving out a dividend. Pay down your debt, bro. What are we doing? Pay down your debt. 11.6 billion? Pay down your debt because it's about to be a liability. You keep pumping out dividends even at 14 cents. You keep buying back shares like crazy and your revenues keep going like this, or they stay at 4%. You're going to run out of cash. You're going to run out of cash and your debt is going to be more than your cash eventually. Absolute garbage. What a dumpster fire this company is. Financial guidance. They gave no revenue guidance. They gave no revenue guidance. If you love PayPal at 293, you're going to love it at 44. Hey, listen, I lost $26,000. I lost 20. Come here. Let me talk to you. I lost $26,000. $26,000 of my hard earned money when I decided in 2024, I'm done. I'm done. Can't do it anymore. Can't hold this company anymore. Promise, promise, promise. Underwhelm, underwhelm, underwhelm. Then, after I lost $26,000 believing in this company and saying, you know what? I was wrong. I was wrong. And I exited and I said, see you later, PayPal. I still used the product. I still used the product because I was like, the product's fine. And then they locked up my money from my business account with them for 4 months. And they said they could have done it up to 180 days. And I posted about it, and then everybody and their mother was telling me, yep, they done that to me. Yep, they done that to me. Yep, they done that to me. Garbage. Trash. You don't lock up people's money. Okay? Jeez. With like no explanation or anything. Trash. Trash. Look at all these other fintech companies. Look at all these other fintech companies. There's plenty to go around. They are done. PayPal's done. Basically, once they got booted off eBay, this company's not been the same. Not been the same. PayPal's whack. Yes, it is. Can't even guide for revenue. Mid to single digit decline. Mid to single digit decline. Oh, I didn't even read that. Wow. 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 Look at this. You're buying back shares like crazy. You're declaring a dividend. Oh, I'm going to flame them right now. Wow. Wow, wow, wow. PayPal is a dumpster fire. PayPal is a dumpster fire. Fires young, new, CEO. Buys back shares like crazy. Yet guides for decline in EPS in FY26 and missed EPS this quarter. What else? Declares a dividend. What else? What else? What else? What else? Declares a dividend while revenues are accelerating to the downside. 4% growth. FY25. Debt only have 3.2 billion more cash than debt, I think. Yeah. Only have 3.2 billion more cash than debt while shilling out buybacks and now dividends. Overall, I wouldn't touch this company. This looks horrendous. Also, vast competition across fintech. Yeah, I think that's a good post. Absolutely dumped on it. All right. Morning, Ronnie. What's with the market today? Are we down? Yep, market's dumped. Guys, I've been saying I do not trust this market. I don't trust it, don't like it, don't want anything to do with it. Honestly. honestly. Don't like it. Don't want much to do with it. feels like we're about to have a very, very bad time. Feels like we're about to have a very, very bad time in the markets. I've been talking about it and I've been saying that I think that we're going to have a falling in the markets until about April timeframe. That's what I think. Carry trade coming in, watch out. Probably. It's a bunch of stuff. That's what I was thinking. Should we just stay sideline? Make sure you have cash, friend. Make sure you have cash. I hate to be like trying to time things. But sitting there and saying, you know what, I just want to make sure I have cash. Not a bad idea. Not a bad idea, friend. Not a bad idea. Have lots of cash because the opportunity that could come from a move down here could be huge. Huge. Yeah, I mean, look, the prism indicator right here says wait. It says wait. It doesn't say, uptrend, or it says, I'm sorry, it doesn't say powerful, right? It's not this move here, it's not that move there. It says wait. And then at the same time, right, we are not down here. Remember in April, we got down here and the matrix told us, okay, hey, we can get in right in here. And then we rode this higher. But now we're still up here, right? And we could stay up here for a little while, but eventually we're going to come down. And we already made this cross here. And then this one retested in February 18th, and then it dumped. Maybe retest here and then dump. I don't know. Nobody knows for sure. But what I do know is this, my philosophy, and this is what I teach inside my High Five Collective for investing. This is what I teach inside the High Five Collective for trading. I teach that the markets they have cycles. The markets have a cycle, and you need to deploy capital at different times in different amounts based on the cycles. Right now, based on my indicators, the matrix, the prism, and the flow. These are momentum indicators. It is telling us to wait. It is telling us that we are in what I call storm. We're in the storm cycle right now. We're in the storm matrix. And what that means is you should not be going and buying up crazy amounts of stocks right now for investments or be going crazy with trades right now. You should not be going crazy with like 1 month, 2 month, 3 months out options at all. At all. You should be being patient, raising cash in here because you're consolidating for a reason. When you get consolidation, you either get expansion or despansion, deceleration, breakdown, whatever you want to call it. When you get consolidation, you either get expansion or a breakdown. Every single time. Boop, expansion. Up, breakdown. Okay? So, you could sit there and say, "Oh, well, Ronnie, I think we're going to get expansion." All right. Well, to me, this is about the same distance as this, right? It's about the same distance. So if you go back, you can same distance, right? Before you have some kind of big blah, right? Yeah, I don't know. To me, Matrix is telling me, hey, not the time to be playing in the sandbox right now. Look at the Williams percentage range. It's just chopping sideways. Look what it did here before Tariff-Geddon. Chopping sideways. It's good staying in the box. We're heading higher. It's good staying in the box. We're heading higher. It's good. We're staying in the box. We're heading higher. And then losses. This was losses. Probably losses. Okay. It's what I'm seeing. It's what I'm seeing. Does it mean it can't go higher? No, it doesn't mean it can't go higher. I'm just saying right now, based on everything I'm seeing, it's not telling me that I need to go and buy all these trades and be so into the market and blah blah blah. No, not telling me that. It's telling me, Ronnie, be patient. Be patient. Because look at this. Look at this. Let's talk about this. Let's talk about this. 2019. This was, let's say, it's 5 years ago. 2026 isn't even fully done. 5 years ago. How many times in the last 5 years have we had opportunities to be trading big coming out of this is the sweet spot. This is the sweet spot right there. This is the sweet spot between -100 and -60. That's the sweet spot. And remember, we're looking at a weekly time frame. So let's see. 1, 2, bear market, 3, 4, 5. 5 times out of the last 5 years, you've gotten an opportunity to wait until the matrix comes down to the sweet spot. Then you go heavy into investing. You deploy your cash like crazy. Then you go crazy with trades, not while you're down here, but you start looking for trade setups when you curl up and out, when you start curling 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 up and out. The toughest part about all 5 of these was this bear market. Okay. That was the toughest one. Besides that, you're just going up and out, up and out, up and out, up and out. Okay. So you're still like 4v1, 4-1, 4-1 here. Maybe you would have got messed up a little bit in the bear market, got in some trades, got out some trades, got in some investments, not done the greatest, right? Because of the bear market. But then these other 4 times, you cooked, you crushed it. Crushed it on trades in the uptrends and momentum. You crushed it on investments on the uptrends and momentums. Why are you rushing into trades and investments right now when we're up here? And guess what? This is gravity, guys. This is gravity. What goes up must come down. 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 Sometimes it comes down a little bit and you can keep trading these little pops, right? And this is where we do like some swing trading and stuff. We trade these little pops with swing trades, but we're still not using a ton of cash. We're trading these pops with swing trades, pops with swing trades, but we know that something big is coming. We know that something is going to happen. Something is going to happen where eventually we come down here. And this again is the time to deploy your cash with investments heavily. You're going to have the most deals out there. This is the time when you're curling up and out of this. This is the time to be going heavy on trades. You can go heavy with options 3 months out, 6 months out, whatever. You can do all that there. That's called clear skies. There's clear skies, which where we're deploying like 100% of our capital. Then there's windy, which we're only deploying like between like 40 and I'd say like 50 to 60 to 80% of your 60 to 80% of your cash in trading with during windy conditions. And windy conditions is like here where like, we're high, but we are extended. And then storm, which we're in right now, storm is whenever this blue line is below red line. This means that, hey, we are still bearish. Here we're bearish, here we're bearish, here we're bearish, here we're bearish. And when we're below this, bad things can happen, right? We could stop short or we could really just fully go up, like under and through. Good morning, Elaine. How's it going, friend? Toughest part is to sit on your hands and be patient. Yes, it is, but you need to. If you want to be around in the long term for this in this game, you need to be patient. Just tune in every day for the Ronnie show and he will give us the green flag. Yeah, no doubt. No doubt, friend. No doubt. I teach all this. I talk about all this consistently in the collective. And I got some big things going on. We're about to be launching a website here soon for the collective. We're getting away from Discord completely. Getting away from Discord completely. I don't like it. Too many people on Discord, too many alerts, too many channels, too much garbage. I'm building a website and we are going to have all my trades, all my positions, and then we're also going to have investing, all my trades, all my positions, all my portfolios. We're going to have some really cool tools on there talking about the sectors and giving overviews and seeing what companies are doing best year to date. It's going to be amazing. It's going to be big. It's going to be big. Cannot wait to get that launched. And I think pricing is going to be pretty affordable from what we're doing right now. So really excited for that. The toughest is a DCA on PayPal leaps. I'm not going to tell you what to do with PayPal, but I took a $26,000 loss on PayPal in 2024. Rear view mirror. It's in the rear view mirror for me. I am over that company. Never again. Never again. Man, this one's tough for me, man. I'm in AMPX and I'm doing pretty good. I feel like it can come back to retest. But it's fine. I'll just hold. Robinhood, $87.84. I see the next support level at $80.34 on Robinhood and then $67. Those are the support levels I see. Bearish is accelerating. Bearish is accelerating on the prism here. It's accelerating. The matrix is going down. The flow is going down. Everything looks horrid. Everything looks horrid. The spread on this is horrid, meaning like you see this dark red means that the selling is accelerating very quickly. People are running for the doors. All right. Netflix still coming down, holding that $82 range ish. I think next support is right around 70. I really like that. I really like that name down there. Notice too about the markets. What do you see? I see a lot of safety names getting bids. Pepsi, Costco, who else? Texas Roadhouse. People are going to still go get their cheap steaks. Toll Brothers, which is housing, McDonald's, Caterpillar, even Starbucks. Rocket is rocketing 11%. PayPal down almost 18% now. BE just cannot lose. Look at this. Look at this though. Down in the sweet spot on BE, we had a powerful move on the prism and we're rolling up and out. Look at this move. Bang. And we're still riding. Massive. What else we got, guys? Heavily invested in Zeta. Don't know if I should take the L and wait out a bigger correction. Look. I am heavily invested in Zeta. Majority in leaps for 2028. Here's my thing. If I buy shares and if I've been buying the amount of shares and using the amount of capital it would have taken me to get the leap, because with leaps, I can get more access to more shares for cheaper. If let's say I didn't do these leaps and I took all that money and I was doing only shares. Listen, if I was doing only shares, okay, I would have to have a ton of money in this name. I'd be DCing like crazy. But here's the thing. If we had a correction, if we have a huge market crash, which I don't believe we will, I believe that we'll have a correction similar to maybe last year or a bit less, maybe not 20 some percent, a bit less into April. And then we rip from summer to end of year or maybe into midterms and then hit some snags again there. But I believe that if with that correction, I would be down big on my shares anyways. I'd be down way, way more than with my leaps. Also, I would have way more money invested. So I'd be down way, way more. But with my leaps, I can sit there and I can say, I don't care if the price goes to $5 in Zeta. Will it look bad on my screen? Yes. But what do I care about? I care about Zeta being a 25, 30, 40, 50, $60 stock by time January 2028 comes around. It could go down to 5 and it could still go right back up to 60, 70 by time January 2028 rolls around. That is why I'm buying leaps, because I find it irrational and damn near impossible. Now, anything's possible. Don't get me wrong, but how I feel is that I don't see how, honestly, with my this how strong my conviction is. I don't see how Zeta is not above at least 25, more so $30 per share come January 2028. I don't see it. I think we can go through a 2008 and go down for a year and then still have over a year to come back with Zeta. Because marketing is only at the infancy stage. Marketing is in everything. All companies need to market, and they're going to continue to need to market. So don't just steal my conviction, okay? Don't just steal my conviction. I get it. You don't want to look in your portfolio and see that this thing's down 3.22% today and that we're down now 12% since from year to date when we were flying high just a couple weeks ago. Look, it's not a Zeta problem. It's a SaaS is dying. Oh, that whole narrative. But let me be very clear. Like I made a post on X. Zeta is not being disrupted. They're not being disrupted. They are the disruptor. You got $100 billion market cap companies like Salesforce and Oracle and Adobe that play in this pool. They play in this pool of marketing. Zeta is 10 times better. You don't see Salesforce and all these other companies saying, for every dollar that you spend on us, we will return $6 in value. They're not doing that. May it be a little difficult for companies to switch over because they have sticky business models? Yes, but the great thing is you can have more than one. These companies have money and they're okay with having Salesforce for some things and Zeta for the big thing, marketing. Whew. Look, if you feel your confidence is getting shaky because of the price action, because of the stock price, because of some idiot on X saying this company sucks with no anything, dig into the company more. Look at my research. Watch my videos. Go over to Wealthmatica. That's my buddy Nick. Go over to his stuff. He preaches all the time. He has videos. He has great due diligence. He posts great DD. Then come back to me and just tell me that Zeta deserves to be sub $20. There's no way this company deserves to be sub $30. It's not just me. The lowest analyst. Analysts are freaking idiots. The only true amazing analyst, is me. And I'm a retail analyst. I'm a made up thing. Retail analyst isn't even a real thing. I made it up, but that's what I am. And I do better due diligence than them. I'm better with my price targets than them. They have a $25 at the low price target for the next 12 months. We're sitting at $18. I mean, holy smokes. And I'm not coming at you for asking about selling the leaves. I'm not coming at you. I'm more so just like I'm preaching. I'm preaching. Getting it off my chest. Look at this. Look at this. The stock price is down, yet since 2023, every single quarter for the most part, margins are up, up, up. Net income going from -30 to -1, about to flip profitable. Operating margins going from -25 to 4.5. Free cash flow, cranking it out, 7.5% margins to 15.6% margins. Guess what? They're going to grow, and they guided for 35% revenue growth this year. You know why? Because it's a midterm election year. Election years, midterms, they spending like crazy. Software narrative is just like Google. Might take a year or so to blow over, but gives a chance to build a position in companies that are unlikely to be disrupted while their sector drags them down. 1,000%. I was talking to Wealth yesterday on the phone, and I was talking to him. I was saying, I was about to make a post on X, and I was about to say, man, I was about to make a post saying like, some big statement, right? Because big statements are the things that people like. They want your big statement on like what's going on. And I was about to say something like, software stocks will outperform everything for the next, and then I stopped. I was about to say software stocks will beat everything and outperform everything for the next blank years. And then I sat there and I was like, I got really stuck on that part. I was like, okay, for 2026, for 2027, for 2028, and I couldn't answer it. I couldn't honestly answer it. I didn't know. I don't know. See, with Google, I will say with Google, it was way easier with Google. Because Google also had Waymo, and it was like, dude, like it was so overblown. I think a lot of the SaaS narrative getting disrupted is overblown with some companies, but there are other companies that they will get disrupted and they will go bye-bye. They will go bye-bye. So I was sitting there and I was trying to like, because I think like companies like ServiceNow, even Adobe, companies like Cloudflare, even like Salesforce, right? I still think they're going to be fine. And especially Zeta. But I could not like be like 2026 they're all going to outperform 2027 because I don't know. I don't know how bad and how long the sentiment stays bad, guys. I really don't know. So I couldn't honestly say. But there is a huge opportunity there. I'm going to wait and I'll miss some of the move. I won't catch the bottom. I'll miss some of the move, but I'm going to wait until my charts in their direction tells me, "Hey, it's time. It's time. It's time." Guys, I'm sorry. I have to address something real quick. I'm not a cocky person. I'm not a cocky person. But people on X, they like cocky people. I'm not going to change who I am. But I will pat myself on the back when I'm right. Okay. I will do that because you do good work, you get rewarded. Guys, turn on the notifications and follow. You can't afford to miss another monster trade. AMPX almost up 10%. I literally just might copy paste that. I'm just going to copy paste that. Here you go. Up another 11% now. Check it. Check it. Check it. You want to see? Oh, Ronnie, you just say things after the fact. Okay, there's AMPX. That was $12.88. Now sitting at $14.88, up $2 today. Whatever. We can go back further. We can go back further. Okay. There you go. January 14th. $10.19. We're at $14.69. What'd I say? I said monster trade setup for free. For free. Monster trade setup. Ampex is undervalued by 97% and bouncing off 2023, 2025 resistance. Target's 1473. Oh, did we hit that today? About to. 1481. Look, we already hit our first profit target. We hit our first profit target. Now the next profit target is 17. Okay. First profit target hit. For how much? What did I say this was at? 10? 967. 967. 971. 40%. %40 higher since call out. All right. Crowd won't, because would you replace your cybersecurity with some Claude? No, definitely not. My thing with crowd is that the fundamentals don't make sense, I guess. I don't know, I almost knocked over my coffee, dude. I don't know if the fundamentals make sense. We're up 20%. 20% on these AMPX options I called out in the trading collective. Monster. Will Hood win? I think Hood's going to be just fine, friend. You're just going to be just fine. You know what scares me about Iran and NBIS and why I'm not like buying heavy leaps and stuff yet? This scares me. That scares me. Look, this looks good. We're not yet powerful. This looks good, but we have not crossed yet. This scares me because this could always be a high, a low, a lower high, lower low down to here, and then that'll be the true bottom. And that would align with, right, like this retesting of 16 bucks. You say it can't happen, doesn't matter. If the markets fall, and everything pulls back, shit. Thanks. All right. This is what scares me about Iran. Again, I already said most of it, but if this is a high, low, lower high, lower low, right? We've come up. We really need to form a Williams consolidation box like we did here to really get running. There are some things I really like on this chart, like this, but it's not crossed yet. This right here, we're in wait mode. We have not hit powerful yet. We have not flipped to powerful yet on the prism. And if we don't flip to powerful, how are we supposed to get this? How are we supposed to get that? How are we supposed to get that? How are we supposed to get that? Right? If we don't flip to powerful, it's going to be tough. And typically, I want it to be coming from down here because that means bigger moves. And it's up here. So I really like this. I really like Iran. I really like Nebius. I really like Cypher. I really believe that they're going to be that next bottle. I think they are the next bottleneck in AI. And I think they can command pricing power like you see with Micron and SNDK and other memory companies right now for memory chips. I think they can command that power. But if the markets take a crap, I don't know. So yeah, we'll see. QQQ down 1.31% today. And again, remember what I said, just be patient. Be patient. There's no reason to be rushing into everything right now. No reason. What we got? Opinion on UiPath. The chart looks terrible. Yes, it looks absolutely terrible. Some days I wish I would have just kept on, saying that I think anybody can do what Path does, but I just can't say that because they can't. Okay. I do believe Path is a winner in the long term. You should be able to see my charts now. I have it up. You might be delayed a little bit. Zeta today, great opportunity, but I have small capital. Just keep pumping keep pumping money into your brokerage, man. So you keep getting fresh capital because these margins don't lie. Up and to the right, revenues up and to the right. This is based on like quarterly. Like they're doing what Palantir's doing. And they're about to flip profitable. Look at that cash flow. Look at that cash flow, guys. My goodness. Exploding. 37%, 38% quarter over quarter. 3-quarter average, 13%, 15%. Guys. Say a recession comes. More assets than liabilities. More cash than liabilities. They'll be fine. And guess what? Recession comes, people, they got to spend more money to get to you with marketing. Because if they don't spend more money on marketing, you're not going to keep buying. Only way I can make more money right now is poker at school. So not a lot a day. That's awesome, man. You're a hustler, brother. You're a hustler, man. I love it. Dirty RCS, guys. He's only, you 16 now or are you still 15? He's a young guy, man. He's a young guy in here getting after it with investing. You love to see it, man. You love to see these younger guys getting after it with investing because you're going to do phenomenal. You're going to do phenomenal putting this money. 15 still? Heck yeah, dude. That's awesome, man. I wish I would have been investing at 15. Jeez. But yeah, markets are poo poo. Our trades are going phenomenal. The trades that I have, these are my trades right now: CRML, LTRX, AMPX, which CRML is still down from that whole fiasco with freaking whatever they're called. I missed out on this one. Look at this. Powerful uptrend. Missed out on PDYN. Market is really strange right now. Yeah. Look, oil, energy, defense, drones. It's like little pod shots of things that are going higher and up. I sold $3,000+ in silver stock today. Awesome, man. Congrats. Congrats. Silver up another 10%, but it did drop to 68. So crazy, crazy. Not saying like you should have sold sooner. I mean, you still crushed it. How long do you think Zeta will go? Like to the downside? Friend, I have no idea, honestly. On a daily chart, we have reset on the prism. We flushed out. We're in the sweet spot. We're at the 200-day moving average. We're at all this support. All this support. My goodness, look at all that support. And you got earnings coming up. And you're at the bottom on the Williams percentage range. I like TMDX. I do. So for right now, you lost a 21 EMA on the weekly. You're rolling over on the matrix for now. The week's not over. You're in wait mode. You're still in an uptrend, but you are in a wait mode now. Weekly looks mixed. Overall, still an uptrend. But again, like, but again, guys, I'm not trading Zeta. So like the chart looks like crap. The chart doesn't play out, whatever. Like I just understand like what's up. Like you have these pullbacks and then you have these breakouts. You have these pullbacks and then you have these breakouts. Like it's just building structure at the end of the day. See? Run up, pullback, expansion. Run up, pullback, expansion. Run up, pullback, expansion. Run up, pullback, expansion. That's how stocks move. So, yeah. Let's see. 16, awesome. Do I hold any precious metals or precious metal stocks? I do not. Volume pocket, look higher above 19 though. Don't get it. Liquidity seems to be to the upside. Yeah, 100%. 100%, man. We're right here at the volume shelf. That's another thing. The volume shelf holding us steady. Puts on tinfoil hat, market makers. Looks like retail like Zeta. Let's whip price around like mad and grab a ton of liquidity. Probably, man. Probably. You know how I know? Vanguard increased their position. I think they have a 10% position now in Zeta. Vanguard. Come on, man. Come on. Also, Dan Ives is on the advisory board for Zeta. We uncovered that yesterday. During our live stream. How to be here. You can go back and rewatch it if you want. Yeah. Crazy. Let's see. Vanguard, yeah. Fake news. What's up, Will? Nick, if you want to, oh, then I'm not gonna say that. Sometimes my brain is just like, no, can't say that. Nick, if you want, if you want to see me rant about Zeta, scroll back probably about 10, 15 minutes ago. I don't even a rant. I was preaching, brother. I was preaching about Zeta. Preaching. I've also been preaching about how PayPal is a piece of garbage company. So 10% of their portfolio or 10% of Zeta? No. 10% of their portfolio. I wish Vanguard owned 10% of Zeta. That'd be massive. They're hiring a crap ton of positions in AI development. But they're also not over hiring, which I love. Yeah, market's been really weird lately, guys. Very, very weird. Yep. Everybody was saying that Ethereum and Bitcoin were back. Don't think so. Think we're going lower. People seem to think you and I work for them. Yeah. If I work for Zeta and they were paying me what they would need to pay me, I would not be doing a live stream at 10:44 a.m. on a Tuesday morning. I think that's so crazy. That's so dumb. Let's break that down real quick. People legitimately think because I interviewed the CEO and Nick here interviewed the CEO, they think, they also because we talk about the company and we have a lot of interest in the company, that Zeta is paying us to basically pump their stock. They're paying us to basically push their stock and talk about it all the time and blah, blah, blah. Listen to me. Why on earth would I have the amount of leaps in a company that would come to me? And why would I be so heavily invested in a company if they came to me and they said, hey, Ronnie, we'll pay you this money to pump our stock? Why would I be heavily invested in a stock like that? Think of it. If a company told me, hey, the only really way we can actually make some money here is if you pump the stock, why the fuck would I be invested in it? Excuse my language. Why would I be so heavily invested in it? You think I believe in the CEO? I've had companies come to me and DM me through third parties and whatever, saying, oh yeah, we'll pay you a couple $100 or whatever if you just inform people about our company. Just inform people about the stock. I don't want to touch that stock. Screw that. Oh my, I own everything you own in your Blossom. Circle except Oscar. Love it. What are your Zeta leaps? I have 2027 leaps. I have 2028 leaps. I have them ranging from $12.50, $15, $17, $20, $22.50, $25, $30. I mean, I don't think you're paid for, but you could be lying about leaps and people don't do their deep research. I don't know. That's what people could think. Okay. I get it. Anybody could be lying. You can ask Nick if he's still here. I've shown him how many leaps I have. I showed him the hundreds of thousands of dollars in leaps that I have. So he'll tell you. And Nick's my buddy, but he doesn't know me anything. Nick, you still here? Let's see if he's still here. Perhaps PayPal will pay you. Lol. They wouldn't even give my money back that they had locked up. Well, tell the people. Tell them I showed you my leaps positions and how much I have in there. Ronnie has a stupid amount of money in leaps. Yes. I like the keyword stupid because if I'm wrong, it is very stupid. But I don't believe I'll be wrong. 150K plus. Yeah. Thank you. So, a million leaps. I wish. Look, if I'm right though, listen, 150K in leaps at the prices I have them stagnated out. Look, if I'm right on Zeta and where they're going, they will print at least over 1 million, if not almost 2 million. So, yeah, the whole like they're paying us is just stupid. And again, why the hell would I have 150K plus and leaps, which are more risky, in a company that's willing to pay me? They need to pay me to get people to notice their stock. I'm talking about their stock because I'm legitimately like, holy crap, this is one of the best opportunities since Tesla when I invested in them, since Palantir when I invested in them. Honest to God, like, I'm just freaking excited and pumped about it, dude. I have 5,610 shares. I'm overexposed. As long as you got money to meet your needs, man. See you in 2027. Yeah. I think 2026 is still going to be a great year for Zeta. I think it all kicks off with their earnings here, which me and Wealth will be going live on this channel to cover their earnings. Let's see. Palantir, is it coming down now? Yes, it is. Yes, it is. What about Hood? Robinhood. 1.4% down. It's going to sell off like Palantir. Holy moly, that's a lot of leaps. It's a ton of leaps, dude. Palantir PE. Yeah, PE is crazy, you know. But 70% revenue? My gosh, guys, come on. All right. Smash that like button. Bang, just hit it. Don't even think about it. Do it. Do it. Do it. Hit that like button. Subscribe. Let's get to 5,000 subscribers on YouTube. If you're watching on X, go to my YouTube. Subscribe. It's free. Hit that like button. Uber looks like a good swing trade. Let's find out, brother. Uber. Reminds me of have you guys seen Vikings? Uber, the brother. That was a great show. Who's seen Vikings? Drop it in the chat if you've seen Vikings. What a great show. What a great show. Yes, I have Oscar leaps. I have a ton of Oscar leaps as well. I'm curious to see what the earnings report will do for high beta this time, whether Zeta will get any momentum from it. I think if they print a profitable quarter, it's undeniable. It's undeniable. Undeniable. Ronnie, do you own anything? Do you know anything about Paladin? Yeah, I know they were awarded a where are they at? I should have been in this. Dang it, man. Look at this, ready to go. You know what ready to go means? Ready to go means let's get trading. It means get in there, Ronnie. Hey, man. 20% a day. Jeez, dude. So yeah, you see this? We got a bull trigger here on the matrix coming out of the sweet spot. We have a powerful move uptrend on the prism, and we had a flush out on the flow, and we're curling up and going. Yeah, it's really going. It could probably keep going. If yeah. That looks like just a giant old bull flag, guys. My goodness. Look at that. That's sexy. I don't want to chase it. I don't want to chase it, but it could go a lot. It could go a lot. It go to 20 and it's at 7, man. My goodness. Dude, why do I keep doing that? There you go. Bull flag, falling wedge, whatever. 1986. Powerful uptrend on the prism, matrix, buy alert. Coming out of the sweet spot. Flow was flushed out. Looks good. Yeah, let me look at Uber. Yep. To what price you think? The measured move is 1986. Does that mean it's going to go straight to 1986? No, it also still has to break out above 957. Which leaps you got on Oscar? I bought Jane 2028 calls last week. Again, I have smaller amounts of 2027 leaps, and I have a lot bigger amounts of 2028 leaps from like 1250, 15, 1750, 20, 25, 30, going less and less as we get out the money. And packs, 12%. Like, subscribe, says Clayton. Yes, like and subscribe. Everybody like and subscribe. Appreciate you, friend. Yes, Vikings. Yes, great show. Great show. And they ended it good, right? They didn't like go too long, blah, blah, blah. All right, Nick, we'll look at Uber. No, Nick, no. Okay, that was a weekly. Let's look at a daily. No, Nick, no. I mean, look, if you're trying to catch this like support here, it's just very risky. You got earnings coming up. Oh, you got earnings tomorrow? I don't like playing earnings. I think it's just gambling. So, but yeah, it's in a clear downtrend. In a clear downtrend, it does have ignition, so it's getting close, but still not there. It needs to break out. Needs to get above 82. I mean, don't get me wrong. Again, you are oversold. You could have an explosion after earnings today. You're at nice support. You're starting to get ignition, which could send us into a powerful move, and you have some sort of washout. Yeah, Google earnings tomorrow. That's going to be crazy, huh? It's going to be crazy. Uber getting punished because of Elon. Is that why? Are we back to that again? Silly. Wow, ETN. Wow. Last I checked this name, it was down 6%. Guys, it was down 6%. Look at that. Oh. So they reported earnings. They dropped. Not 6%, 4%. They dropped 4%. Now they're up. Crazy. I was going to buy AMP, AMPX or AMP, Ameriprise Financial, AMPX. Yeah. I wouldn't chase it, friend. Trust me, I really like it. Listen. There's always a trade. Always a trade. Okay. Always a trade. I do believe it's going to 16, then 1856. I believe it probably does something. It's going to do something like this. It's not going to go up in a straight line. So we have this. We'll probably pull back to here. This is your opportunity right here. When we pull back right here to say 12 to 13 range, you see right here, you see all this support and resistance that needs to get flipped. I believe we pull back there. This would be a great time to be getting in. And then I think we go here. That's what I think. Zeta will see $17 again. Let it. I'll buy more leaps. It's holding well. Hey, Wealth, did you see this? 100-day moving average on Zeta. It's literally held 100-day moving average on Zeta. Sorry, 200-day. What am I talking about? 200-day moving average has held ever since we bottomed out in April and we broke out in August. Ever since then, we've only held the 100-day moving average. 200-day moving average. Am I stroking out, bro? What the? 200-day moving average. Only have held. So 1745? Yeah, 17 again for sure. It could dip below it too. But just understand. We are under the 100-day moving. I'm just going to go. I'm just going to leave, guys. I can't stop saying 100-day moving average. 200-day moving average. Hasn't seen it. Hasn't closed below it since down here when the business was being attacked with the short report, the lawsuit, all that crap. And now they're about to flip to profitability. So I don't know. I'm just saying. Held. Does it hold again? I think so. Again, I can't really see us coming down to like 15, 13, 12. Unless someone needs a white monster energy drink. Yeah, clearly. I drank so many. I drank so many white monsters during my time in the Air Force, man. It's crazy. I used to drink so many energy drinks. Probably terrible for me. Yeah. You get the 200-day on the moving average. You get the 200-day moving average on the daily. Great buying opportunity. What about here? What about here? Have any rip-its? Yeah, you know I've had rip-its. You know I had rip-its. Ron is the type of guy who drinks the regular monsters. So stupid. 1356 is a 200-week moving average. Yeah, risky. All the rip-its, man. Rip-its were like currency during deployments, man. All the TCNs wanted them so bad. Yeah, it's funny. Good old days. Those are fun. Deployments were fun. I should probably reach out to some of the people I was deployed with. It's always good to check in on people. Adobe 275. Crazy. My goodness. You're in Afghanistan 2011? I wasn't in yet. I graduated high school 2011. So I just told you my age. Don't care. Yeah, I joined beginning of 2012, beginning of 2012, I believe. Yeah, beginning of 2012. All right. Man, right at that support. Do you think Adobe's worse off than COVID? Because COVID was 255. The revenues, the earnings, The margins, everything's only been up since COVID. Look at what you sent me on Discord. I don't even have my Discord put up. I'll buy Zeta at 17. I'm in deep on Zeta. Let's get it. Yeah, I think, in my opinion, Adobe here is good DCAing. I think people will look back and say, well, I could have got Adobe for 275, 280. I think Adobe's probably selling off a lot more today too, because people see a company like PayPal, and they see that, okay, well, maybe, definitely some investments might not work out. Serious, that screenshot on Discord. Okay. You're so pushy. You're so pushy, bro. Let's see. Let's see. This is what Nick shared. So since the bottom, we've had this nice trend line that consistently hits. Yes. Oh, they're at 1858 right now? 1792? Oh my God. What do I do? Jeez. Jeez. Yeah, you can see it right there. So I posted this before too. Where are we at? The channel. The channel. Ready? Doop. 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 There you go. Where should I be buying Zeta? I don't know. Maybe at the bottom of the channel. Because what do I know? I know that they broke out of this downtrend. So they broke out of the downtrend, and now they're in an uptrend. They were in a downtrend channel. Now they're in an uptrend channel, just like they were in an uptrend channel here. Then yeah. And big and mega caps are still not getting a beat. Yeah. I'm happy Zeta is down because I'm still building my position. Love to hear that. That's the right mentality right there, friend. That is the right mentality. I'm about to reposition my portfolio. I already said it. I'm about to start selling things off to buy more Zeta. I'll sell you. I'll sell all of you. I don't care. I'll sell it all. I don't care. I'll buy more Zeta. I don't care. I'll do it. Watch me do it. I will start liquidating things like crazy. I will start pumping my cash into Zeta. Just picked up 1,000 shares Zeta, 11,000 shares now. Boom. Probably a future millionaire right there in Conviction Lab. Not financial advice. Not financial advice. But I believe it is possible, not financial advice, that if you hold 10,000 shares of Zeta, you might be a millionaire one day. Not financial advice. Just my opinion. All for educational purposes. I have a limit order at 1785. Come on. Get there. Hit it. Oh, it hit 1788. AMPX gains into Zeta? Maybe. Maybe. You know what I'm about to do, honestly? Onto Innovations. It looks so good still, not even going to lie. So it's hard for me to sell, but I might sell on to Innovations to put into Zeta. I might sell FLNC to put into Zeta, even though I feel like they're still running. They're still, look at this powerful move. We've been in this thing since 10. Another one we called out on X, by the way. We said monster trade alert on X. FLNC called out at 10. We're at 31. 3X. It's also undervalued. Not so much undervalued anymore, but I might just have to do it. I think the opportunity is only until earnings. Yeah. Nick, you said you ran your numbers, and even though you messed up on the numbers, you still believe they're gonna be profitable. Bloom Energy is 173. Man, I messed up on that one. Nick, if you're still here, wow, look at that. Because they reported earnings. No, they reported earnings tonight. Nick. Because I'm pretty sure Nick said that they should be profitable, not financial advice, based on his assumptions. Oh, God. Almost 2,000 people in here. Hit the like button. Do me a favor. Hit the like button. Do me a favor. Subscribe for your boy. Please. I love you. Do it. Now. Do it. Like, subscribe. Let's get to 5,000. Yeah, profitable by 100K to 2 million, depending on acquisition cost. They have a range of 15 to 20 million of acquisition cost. If the market isn't like in free fall, say we're like at where we're at right now, where things are still running and popping off. If Nick's right, which I think he is, I think they do come in even with the smallest amount of net profitable on a GAAP basis, general accounting principles. I think, especially being at $18 right now, here's my bold prediction. If Zeta comes in and prints a net profitable and double beats and raises guidance like they continue to do, Zeta's going to be at $20 again very, very quickly. There's my bold prediction. Don't play options on it. Don't be a gambler. Don't be a degen. Be an investor in this company. Plus, the implied volatility is probably insane on those options anyways, so wouldn't be worth it anyways. So don't take that and be like, Ronnie said this. I'm gonna go bet the farm. For that bold prediction, all I ask, you already know. Like the video and subscribe on YouTube. Let's get to 5,000. Let's get to 5,000 subscribers. Let's do it. We hit like 60 likes yesterday on the live stream. How many likes can we hit today? How many likes can we hit today? We're at 4.8 thousand subscribers, guys. Let's get to 5K. Let's get to 5K. We got 22 likes. We're not even close. It's all good. All right. Bring me on. Let's go live on lunch. Let's do it, dude. Let's go. Let me invite you. Where are you at? There it is. I'll send it through Discord. There you go. Delo, yeah, look, I really like Delo still, but PayPal just messed up the financial and fintech sector even more, guys. It just messed it up even more. Like, even more because they did so poorly. So now everybody thinks Pagaya and D Local are going to do very, very poorly. Let me see. Oh, there we go. Seriously considering selling out of Nvidia and buying more Zeta. Well, I believe that Zeta has a way higher upside than Nvidia because Nvidia is such a huge company. Ronnie, good morning, buddy. What's up, friend? Thanks for joining. Thanks for coming. Yeah, man. I After the report, I sold out of my position of Delo and awaiting further dip to reassess. Yeah, just another one that like rockets and then comes back, rockets and comes back because hype comes in, people it builds hype, people want it, and then it's right back down. Agreed that PayPal is killing the financial sector. Yep. Well, first Trump killed it. Trump destroyed it by the whole like capping interest rates on credit cards and stuff like that. That was the first thing, and now PayPal having this is messing it up even more. Also have big ones like four that have been very weak. Yeah. I really like four too, friend. I really, really like four. But it's just a falling. I really like root. I really like four. But man, just a falling knife. And this is why direction is so important. Look at this. You could have shorted the heck out of this thing. Look at this. You came down in the sweet spot. Bearish matrix, bearish flow, bearish prism, downtrend, bearish, big spread. Man, you could have literally got in this thing here and just wrote it down for 35%. Martech is a hidden bull cycle this year. Yep. I have $10 of onto at $100, but it's doubled. Love it, dude. Let's go. Nice job. Payment fintechs like PayPal or cards are being disrupted by banks given real-time payments, at least in Europe. Same for MasterCard and Visa. I could see that. I could see that. Yeah, I really like Root too, but it's just another one, like just freaking falling knife. This is why you have to wait for direction. Fubo. Oh God, dude. Wrecked. Fubo got wrecked. My goodness, dude. 158. My God, dude. Jeez. Let's go. People making profits. Mm-mm-mm-mm. Look at those AMPX profits, baby. 32%. Let's go. On the Discord. Fubo reverse stock split. Oh no. Fill the gap. Do you see that? Yeah. Reverse stock split. Bleh. Gross. Bye. Next. No, thank you. Oh. PayPal is bleeding. Yep. It's PayPal. I will only accept it as PayPal. Oh, did you get filled? 1786, Nick. 1786. You said you had your price at 1785? Yeah. Oh, man. A penny off, dude. Watch it not fill. Not yet. Guys, come over to valuesnapshot.io with me. Look at Zeta. Look at this. Okay. $4.4 billion market cap, 1.22 billion in revenue. They're literally like 3 times the sales, 3.6 times price to sales ratio, like the lowest across, like one of the lowest across the board. $25 is the lowest analyst targets. 40% upside from here. Okay. Okay. Stick with me. Here's our revenue on a trailing 12 month. The revenue growth for the next 5 years, let's just say it stays in line at 20%. They're about to do 35% this year, 2026. But let's just say they stay at 20% on average for the next 5 years, even though they've done 27, 30, and 38%. Okay. Oh, nice. Nick added. Let's go. All right. Free cash flow margins. This past quarter, they did almost 16%. But let's just go with 14%. 14%. You know what? No. Let's go 13%. What they're doing right now, right? Even though they're going higher. Let's do 14%. Then let's do a 25 terminal free cash flow value. What are we talking about? What are we talking about? I know a guy that was heavy into Palantir and Hood. I feel bad for him. Well, I guess I would only feel bad for him depending on his timing of going heavy into Palantir and Hood. If he bought the top, then I feel bad for him too. You should probably follow me and subscribe to me because I would never shill him at the top of those. Guys, it's $29 stock, 63% upside from where we are right now, based on 20% revenue growth, 13% free cash flow margins, which are doing way more than that, and a 25 terminal. Put it down to a 20, still 35% undervalued. Dropping down to 15% revenue growth, still 11% undervalued. Guys, that's like beating it up beyond belief. Beating it up beyond belief. And you're still undervalued. Still a $20 stock. Again, that's beating it up. Realistically, I think they grow an average of 25% over the next 5 years. I believe they get their margins to probably 16 or 17%. What up?
Hey man, how's it going?
Good, you?
Pretty good. I'm on my phone. I realized I left my laptop at work. Sorry for that. So
All good.
No camera. But yeah, dude. So I bought more Zeta. More Zeta today.
Let's go.
Yeah. How about you? Do you buy any more? What are you doing, Ronnie?
Not yet, but I'm about to. I've been live streaming. I have a what do you call it? I have a multitasking disorder where I can't do it.
You have a disorder. What?
Yeah, multitasking disorder. I can't. It's tough for me.
Okay. I see. So I had a speculative position or have a speculative position for a while in Fubo, and today it's just got absolutely wrecked. Um, I allocate accordingly as anybody should when
Yeah.
you're investing. So it's like a 2%, 1% position. It's nothing, right? But I'm thinking about just cutting my losses, and I'm like, whatever, roll that money into Zeta because at this point, I have such high conviction, and it's waste. It's honestly just a waste of just parking it in Fubo. They're about to do a reverse stock split. That stock's going to continue to tank, probably low $1 range. I don't see the point of holding it, so I'm thinking about rolling that into Zeta at some point.
Yeah, I mean, I was also in Fubo. I was also a believer that once they got the Disney deal, it was going to be rainbows and sunshine, and that just wasn't the case. And so I sold out. It was a gem. I believed it was undervalued. And then, like, after all that, I was like, yep, nope. So everybody keeps talking about this Head and Shoulders on the daily, which again, I always tell everybody, higher the time frame, more likely the outcome. So yes, there's a Head and Shoulders here on Zeta on the daily. It did break down. The measured move would be like $14. Do I think it goes to $14? Not unless this market really takes a dump, to be totally honest.
Yeah. I mean,
I'm trying to think of like what bad news, because right now, like if Zeta came out with bad news, I think they would dump hard, to be honest.
Mm-hmm. Well, we could always get poor legal news. That's always on the radar.
Yeah, you could get poor legal news. They could miss earnings. If they miss earnings, then yeah, it's going to dump hard.
I think earnings miss is very, 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 very unlikely.
I do too.
Remember,
I'm just like trying to like, put the what ifs out there, But yeah, I mean, I've
yeah, of course.
Guys, they guided for 2026 revenue.
Yeah, they've got it
like,
for 2026.
You don't do that, and they did it in Q3. You don't freaking do that without knowing you're coming in and beating and beating and beating.
Yeah, and none of that. Remember what I've told you yesterday. So anybody watching live stream, Ronnie and I have been talking quite frequently about Zeta, as we do. I've always said this: Meta is a bellwether for Martech and AdTech. If Meta does well, you got to keep in mind that they are a channel of deployment for ads. They're an activation channel. So companies will utilize Meta to deploy ads and buy up ad space. Zeta is one of those people. So they have a sort of a partnership with them. It's sort of a gentleman's agreement, more or less. It's like they're not competing with them, but they utilize them as a vector to deploy ads. So if Meta does very well, and they always report before Zeta, that's a great indicator for Zeta. If Meta does poorly, meaning that their ad revenue is sort of falling off, that's an indicator that Zeta likely is going to underperform. But in this case, Meta outperformed and then raised guidance to 30% for the first time since 2021. That tells you a lot. That tells you that the whole industry is going in the right direction, and that MarTech is hiddenly, or ad tech as a whole, could be hiddenly in a bull cycle. And I think that's due to the midterm cycle because of all the political ad spend. And Zuckerberg's team actually talked about this a little bit, that they anticipate that the political ad spend will be ramping up towards the end of the year, going towards Q4. And their Q4 report will probably be very, very stellar, along with Zeta. And if you go back to 2024 and you look at how Zeta performed, they outperformed that entire year. And then this year, this past year in 2025, it looked like 2025 they had a significant slowdown. Well, it's just because of the cyclicality of political ad spend. So it's something to keep in mind. I think this year you're going to see some of the SaaS names and MarTech names separate, and that trade will kind of diverge. You'll see a lot of money start popping into ad tech and kind of, slowly rotate out of more of that SaaS sector, and SaaS will continue to sell off. And I think MarTech will catch a bit at some point, especially when that political narrative starts spinning up and election talk starts happening. That's just my 2 cents.
Yeah, I'm looking right now at. I'm down 8% on my Zeta $15 2028 leaps. I'm only getting, I bought it at $8.83 and I'm only getting them at $8.15 right now.
Mm.
So I might do the $17.50 2028 leaps because I'm down 25% on those.
Yep.
And I bought in at 10 and they're at $7.55.
Interesting.
So that puts me at $25. I need the price to be $25 or higher by 2028. January 2028 need to be $25 or higher, which was the recent peak literally last month.
Mm-hmm. Yeah.
So I just need to be there or higher by January 2028. And
January
I can go ahead
2028,
and
2027?
what's that?
2027 or 2028?
2028.
Oh, wow. Okay.
Yeah, so I might buy more $17.50 ones
Hmm.
because I already have 35 leaps of those Zeta $15 calls for 2028. I already have 35 of those.
Yep.
Right around $31,000. I only have 25 of the 1750 calls, so I might add more there. The ones I'm most down on right now, obviously, are going to be the $15 and the $25 calls for 2027 because they're leaps for January 2027. So
Shorter time. Yeah.
yeah, but I put way less money into those. I only have 10 leaps of each of those. Just because, like I told you, I thought this year could be a bit meh. Like I felt like we could have a correction or something this year or something, right?
Yeah, we could. Honestly, I don't know. I don't know what's to come. Like another headwind or potential tailwind is SCOTUS decision on tariffs, right?
Yeah.
There's so much volatility that will happen from that decision to the upside
Yep.
and downside. Who knows, right? Like SCOTUS could decide that all tariffs are essentially invalid, and that may have a great impact on the market, and the market will go up. A day later, a headline will come out saying, well, then who's going to repay the tariffs? Or are the tariffs meant to be repaid? Like, how does that work? What impact does that have on the economy? And how the media spins that will also impact the market. So you may have some sort of whiplash effect of the market going up and then down. Who knows? Honestly, who knows what's going to happen? And what does that do to a company like Zeta? I mean, it's high beta, right? So you have to be very cautious. Very cautious. I think I'm pretty well positioned in Zeta. I think you are too. I like making these small ads here and there at this point. If I had a very small position, personally, I'd be looking to develop a large position at this point. I mean, $17 is ridiculous for a company like Zeta wanting to grow 34% year over year, bare minimum. Remember that that's the minimum guide. A quarter early, right? It's ridiculous. Yeah. And then knowing that a large company like Meta in the same space is projecting to grow, their mid range was 30% year over year for next quarter, which is ridiculous, right? I think their high end was 32 or 33%. So yeah. So like, let's be honest. Like, if Meta gets anywhere near that, what do you think Zeta's going to do, right? That's crazy. That's absolutely crazy. I think in reality, for the full year, 2025 or 2026, Zeta does closer to 40% top line growth.
I agree. And then we're talking about here's the thing that nobody talks about. And guys, if you want to know, I bought 5 leaps of 1750 calls 2028. Not financial advice, just showing you what I just personally did.
Nice.
And what I just added on this pullback on Zeta. No one's talking about Palantir moment. Not in the way that we've been talking about it, but in the way of, do you remember when Palantir flipped whenever they released AIP? And it wasn't just that flipping. It was what came after that. Do you remember what came after that once they released AIP? And then every subsequent quarter since then, what has happened?
Beat. And
gangbusters growth.
Yeah.
Not just year over year, quarter over
Yeah,
quarter,
sequentially.
over quarter, then followed by a 70% revenue right now. And what did that lead to? That led to a astronomical PE and astronomical overvaluation, in my opinion. But worth it. You know what I mean? Because if you bought at 100, people were saying it's overvalued, you're up. You know what I mean? So we have Athena, right? We have Athena, and we have their AIP moment. I believe that Athena and the fact that they will grow revenues like they're going to will only bring more spotlight, will only bring more CNBC appearances, will only have other companies asking more and more, who is Zeta? How can they help me? This guy keeps on saying they return $6 for every $1, now $7 for every $1, eventually $10 for every $1,
Yep.
just like AIP did. AIP's biggest selling thing wasn't just that they gave back all this money to the people paying them. It was also the publicity that they got. Alex Karp became an overnight superstar and everybody's talking to him. I think the same thing can happen, not to that level. Don't get me wrong, not to that level, but in a similar style with Zeta. And I believe it self-fulfills itself to where they, 30% revenue growth, 35% revenue growth, 40% revenue growth possibly this year. And they get more and more people understanding them, knowing who they are. And that feeds into more and more clients, more and more bigger clients, more and more spend. That's what I see. I just can't like, look, people say, don't marry a stock. People say, blah, blah, blah. Look, I am one of the realest people that'll be so harsh on a company that'll call a spade a spade. I dig into Zeta. I try to find that icky, gross thing I don't like. If either they're hiding it really, really well, or it's just not there. Like it's
the icky growth thing is the it's the legal case, but it stands out like a sore thumb.
Yeah,
Everybody knows
if
about
you
it. Everybody knows
understand
about the
that,
short report.
yeah. If you understand it and understand, like, okay, more than likely it gets settled out of court or it gets dismissed here soon.
Yeah.
Probably before first half of 2026.
I think the worst thing that could happen in the name at this moment is a poor headline that says judge is willing to hear the legal case against Zeta Global, specifically pertaining to their round tripping revenues, right?
Yeah.
The alleged round tripping revenues and their data usage or whatever it may be. Now, that headline, I think, has the ability to drop the stock somewhere between 10 and 15%. Worst case scenario, you get a very good buying opportunity at a ridiculously cheap valuation, even cheaper than it is now, but it doesn't fundamentally break the company because you've got to remember, and Ronnie talks about this all the time too, and David talks about this, large companies like this have insurance for a reason. And they're very, very likely, and they're actually inclined to settle this outside of court before it even hits the judge's desk. Now, what does that mean for the stock long term? It means nothing, right? It doesn't fundamentally break the company. The company is executing, and they've shown this through that short report. They consistently execute quarter after quarter after quarter. They beat and raise. They've beaten and raised 17 consecutive quarters in a row, and we're about to make it 18. Not only that, but they're now, projecting revenue growth up into the 30 percentile, and they're likely going to beat that. So I don't think this breaks the company whatsoever. The short report alleges that it impacts over 50% of their data cloud, which is an absolute lie. Deloitte corroborates that it only impacts roughly 1% or less of their data cloud. And the alleged revenues that they suggested were something like 20 odd percent of their revenues is actually 2 to 4% of their revenues. So the impact this has, this quote unquote lawsuit, this short report on Zeta Global is really, what I think is, in my personal opinion, again, this is a personal opinion, what I think happened with the short report is that somebody fabricated a short report. They saw some data specifically pertaining to first party data collection, and they know how sensitive that can be in the public eye, and they saw an opportunity to short a stock on a very good earnings report and have it just drop to the floor and make some money and make a quick buck. And I think that's what's happened here. And if you know who the short report is, I'm not going to mention their name, you can look at their track record and what they've done in the past, and it starts to make a lot of sense. I'm just going to put that out there.
I mean, look at these, like, dude, it should honestly be illegal. Like, it's ridiculous. Like, look at the short report on materials. They probably positioned into that, and then they came out and they said, "Oh, the Trump administration, Reuters, they're like, Trump administration is going to be pulling back its spending and reassessing on materials." They've plummeted.
Yeah.
Trillions of dollars gone. Like, dude.
Yep.
And then MP Materials comes out and they're like, this is total BS. Like, our deal with the government's fine. Like, we have a concrete deal. They're not coming out and doing anything. They're not going to pull back on anything. With us, at least, So, yeah.
Oh, there you go. That's crazy. A really nice chart. Look at that.
Beautiful. Beautiful.
Yeah, we're right on the tip of a volume shelf, right? If you zoom in just a little bit.
Yeah, we're on the volume shelf. This is basically like a 50-day moving averages Bollinger Band, right? We're right there. You have all this support, like right in here between 19 and 15, just a ton. More so like 16, 17. Yeah, I mean,
I tell you, if this thing rolls up and jumps another 15, 20% on earnings, it's going to be 35% of my portfolio overnight.
Yeah. I was just thinking about how much mine would be. Let's see. Right now, even though it's down, math is hard. I think it's like 50%.
Well, you're factoring in your leaps and everything? Dude, that'd be way too hard to calculate.
Well, just in this portfolio that I'm looking at, which is my leaps portfolio, essentially.
What about your equity portfolio? Your investing portfolio? It's about 24%, no?
Yeah, the public portfolio on Blossom, link down below, free download. You can follow me there. It is 24%. Yeah, and I even bought some leaps in there too, so you can go see those leaps as well. Blossom needs to be showing them leaps though. I made a post about it. It's probably hard. It's probably hard to do that. I would imagine.
Yeah, I was thinking about that, and it'd be kind of difficult. You'd need real time data, right? Yeah, because they're so volatile. I don't know.
Yep.
Yeah, but anyways, at the end of the day, looking at Zeta, I'm happy with my position right now. A company that I would like to buy more of is probably Meta, to be honest, man. Like, I know it's kind of cliche to just, say, hey, buy the big super caps. But when does a company that large grow at 30% year over year, other than NVIDIA, right? And they're in a hardware boom. Like, this isn't a cyclical company. Meta isn't traditionally a cyclical company. It's much less cyclical than a company like NVIDIA, right? Where you have boom and bust cycles. But like, when do they suggest that they're going to grow 30% year over year? Like, that's not often, right? So I don't know. I think especially trading at a 23 forward multiple.
Yeah.
I think it's cheap. I would love to rotate some of my Google into that. I'm just waiting to get Google reports tomorrow, see what happens. Maybe sell the news.
Crip Daddy says, aren't you guys worried that SaaS companies are getting their aces kicked? And you compare Zeta to Meta, but ultimately it's a SaaS company, not a platform. Well, that's where the first party data comes in.
Yeah.
And they are building a platform.
Zeta's MarTech, right? You got to look at this as MarTech, AdTech as a combined entity. as a separate sector from SaaS. Like SaaS is this overarching theme, but if you look at the nuance and specifically what tailwinds are coming this year, for example, like the political ad spend, which is ridiculous, it's a massive uplift to companies like Meta, like Zeta. These companies are going to benefit tremendously. Even Google ads and Amazon ads, these companies in these specific sectors, revenue sectors of these mega caps, they're going to do tremendous this year. And Zeta, this is their bread and butter, and they're better at it than literally anybody else in the industry. They have better ROI or ROAS projections that they're guaranteed that they offer their clients, their enterprise clients, than Meta themselves. Like, how do you do that? You have to own channels. You have to own first-party data. So Zeta is more of a MarTech play than it is actually just a pure SaaS play, like you would look at a ServiceNow or something like this, or Salesforce.
Yeah.
There's a lot of confusion around that.
Like I said in one of my expos, they are the disruptor, they're not the disrupted.
Yeah.
Like they aren't shilling some like ChatGPT like cookie cutter BS. They're not like, oh, here's Athena, but it's really just ChatGPT. Athena is Athena. And the only thing that comes out of ChatGPT with Athena, from what they said, is just the voice. Not the thinking, not the back end of it all, right? They built that. So it's not some like, because I get it, like with Claude bot and all this other crap, like I get it. There's gonna be real disruption there. But at the end of the day, what is shown is never actually like fully what you're gonna get to. So, like everything that was shown with Claude bot and everything, like, okay, that's great. Now let's see it at mass scale. You know what I mean? Let's see them.
You can't replicate what Zeta does with Claudebot or anything.
No,
like
you can't. You can't replicate what a lot of these companies do. Honestly, like again,
you can't without the first party data. You have to have the first party data, right? You have to have the ability to collect that first party data. It has to be owned. It has to be a secured source. Everything has to be auditable, right? Hence what's happened with Deloitte recently, and the whole short report. Everything has to be verified. Now, on top of that, Zeta offers a single unified ecosystem where you can take a customer's data set, Zeta's unique first-party data set, and compare identities and verify who is in that customer's data set and who isn't. So then you could specifically target people who are new customers and then work on the retention of current customers. Nobody else can do that outside of Meta, Google, and Amazon. But Meta, Google, and Amazon can only deploy ads within their ecosystem. This is where Zeta is differentiated. They can say, you know what, we don't care where we deploy the ads, we'll deploy it anywhere. Literally anywhere. And we have the data to do it. And we have the ability to do so outside of these walled gardens like Meta. And that's where Zeta comes in. And people tie Zeta up into the SaaS play, saying like, oh, it's a SaaS company, it's going to get sold off, da da da. Well, no, Zeta is one of the biggest beneficiaries from AI. Frankly, that's what Athena is. It's a medium-sized language model, and then it has a large language model voice model layered on top of that, which is OpenAI's voice layer, which allows you to communicate with it. And what they've been able to do in a very modular sense, like just stacked on top of each other, when you have one platform, one ecosystem with a first-party database at the bottom, it allows you to work in a single ecosystem. So you're not going out of that ecosystem to pull third-party data or something like this, or collecting third-party information or other data sets. Everything happens in one place. So that allows you to completely automate it end-to-end, which allows for you to create a superior product for people and offer a better ROI. And that's Zeta's differentiator. And the market doesn't understand the technology. And I think that's what the company is trying to do. And, frankly, that's what you and I are trying to do, Ronnie, is to help retail understand it a little bit more. Yeah. Because we see how great of an opportunity this is. But I think what's slowly going to happen is, Zeta is going to announce things like AthenaCon or something like this, similar to AIPCon, where it allows people in industry, investors, institutions, potential clients, and customers to get hands-on with their product and understand what type of advantage this is for marketing. Because a platform like Palantir, which just essentially is this massive ROI accelerator for general operations and the core function of a company and the glue of the operations, just day-to-day function. Zeta is the equivalent of that, but for that customer interface. Like, how do we automate and expedite that core function of communicating with our customers and getting a product to market? That's a whole separate side of a business than core operations. Zeta offers that, and it doesn't matter where, right? It's because you got to remember, Meta is a single platform. They only have reach within their platform. Meta can't go deploy ads on Amazon. Meta can't go deploy ads on Netflix. Zeta can deploy ads on every single one of them. They don't care. So they guarantee their customer the best ROI, which guarantees them the highest chance of selling a product to a client, because they may have data that suggests, one specific individual, this ID is most likely to be receptive to an ad on Netflix at 6 p.m. on a Friday, specifically on this exact sort of video format or whatever it may be, right? And they're able to then buy that ad space and deploy that ad for their client. Nobody else can do that to this extent.
And they got that data from Live Intent acquisition too.
Yeah, the vast majority of it is from Live Intent. And the way I want to kind of I'm really on this mantra right now of explaining people how much of a differentiator Live Intent makes for Zeta. What type of moat does this give Zeta? Because everybody's like, oh, well, if it's just first party data, why can't Joe Schmo go out there like Adobe and just buy first party data? Well, first of all, argument number one, the question I have for you is, well, what type of first party data? Because Netflix acquires and develops first party data from their clients, their customers watching Netflix, right? But is that first party data that Netflix collects, is it useful for selling products? No, because it's not consumer intent data. Consumer intent data comes from clicks, interactions, screen time, idle time on websites where a consumer could buy goods. Netflix doesn't have that. So just because Netflix has first party data, it doesn't mean you can use it for marketing in the same way one would for content you would find on Meta or Amazon. That's very valuable first party data, where first party data on Netflix isn't good quality first party data for marketers. It's a completely different type of data. And then the second point is Live Intent, right? Okay, well, theoretically, let's say somebody out there develops and collects really high quality consumer intent data, right? Like Live Intent, somebody out there. Well, the problem is there's a value exchange. You have to have a consumer come to you, exchange their personal identity information for something in return. There has to be a value exchange there. On Meta, on Google, on Amazon, people are willing to do this because they get information, right? They get a product. On Meta, they get all the social media interactions. They could go post stuff. They watch reels, whatever it may be. They communicate on WhatsApp, Facebook, etc. Google, you have your whole Google suite of information. You have Google Chrome. You give away personal information so that you can have ease of use and have all that continuity of information from platform to platform. On Amazon, very similar experience, right? You understand that relationship. So Live Intent is the number one newsletter issuer for large enterprises in the world. So you'll think of Groupon, Uber, Washington Post, New York Times, a lot of the airlines like United Airlines, Southwest, they all use Live Intent to send email newsletters to all of their clients, or post newsletters or web postings or little updates on their blog posts or whatever it may be. They use it as a distribution network. So when you go to a website and you say opt in, or say I accept these cookies for newsletter X, that's you opting in to what's likely Live Intent. Live Intent owns over 80% of the world's largest brands for this distribution network. So they have a complete monopoly over it, right? It's similar to Netflix and just streaming videos. They have a ridiculous monopoly over this industry. if not greater than something like Netflix. What I would draw it akin to is like somebody would make the argument, okay, well, then what prevents somebody from creating another live intent? Well, here's the parallel. Somebody could come out and say, hey, why don't I make something similar to X and just replace X? I don't like Elon. Let me just make another X. Well, you know what? Zuckerberg did that. He made Threads. Is it going to nudge X off of its throne? No, it's not. It may get popular one day. It may actually get some users, but it will never be the place where news breaks. When people break news, they go to X. That's what they do, right? When people want to put a huge blockbuster movie out, where do they go? They go to Netflix, right? When somebody wants to, go viral online, what do? They go to TikTok or they go to Meta for Reels, right? You know what I mean? Like these epicenters. And when you have that majority market share and all of these big partnerships, these big companies have developed partnerships with you and you have those brand relationships, it creates entrenchment. And it's very difficult for somebody to come in and just nudge you off of that unless they have some sort of technological advantage, which it's very difficult to accomplish. So at the end of the day, like I know that's a long-winded sort of conversation. This is what gives Zeta its first-party data moat and its differentiator. Nobody can go out there and just acquire first-party intent data that's high enough quality to compete with Zeta in this sense. So Zeta has gone out there and had its foresight to acquire a company like Live Intent, and it's never going to go on the market again because Zeta owns it. And now they're in a position, because they built technology around this first-party data set, to just scale and continue to scale and then take market share. That's why David Steinberg, the CEO, is so confident he can come out and say, hey, in the next couple of years, by 2028, we're going to go from 1% wallet share to 5% wallet share, if not 10% wallet share. That give you an example, right? Like right now, I think it's Adobe has like over 28% wallet share of MarTech. If Zeta comes in and just starts chewing up that wallet share of this multi-billion dollar industry, soon to be several $trillion industry by 2033, this will be a huge company. I think, Ronnie, what's your projection? You think this company could easily hit 10 billion in market cap by 2028?
Zeta?
Yeah.
Oh, 100%.
Yeah. So like the potential is huge, and it's built on a massive technology moat that is very hard to replicate. So somebody coming out here and saying, hey, yeah, Zeta, you know what, I could just go buy first party data. It's like, first off, what type of first party data? Is it useful for marketing purposes? And then two, where are you actually getting this permissive opt-in data and having this exchange? Nobody else can offer something like this. There is not anything like this out there. So that's their advantage. They own the data, and that's the platform. That's the foundation of how they've built their differentiation in the industry, and it's going to allow them to scale.
I actually have I think in the next 5 years, if they execute like I think they will, I think they could now, I think they'll be probably overvalued and like the hype will build and it'll be like similar but smaller scale than Palantir, but I think they can get to 50 billion market cap.
Yeah,
which is
well, if you look at a
insane.
company like the Trade Desk, I mean, they fell from grace, but the Trade Desk hit, what was it, 50 something billion, 40 billion rather quickly.
Yeah.
And the problem is that the Trade Desk never owned first party data like Zeta did. What they did.
So when Amazon and Meta started cutting back, or like started cutting their ads and their like what they're offering in half, then they basically put TTD out of business. Not really, but
yeah, they just developed their own product, and frankly, and they have the first party data to push them out because they can't differentiate. The TTD, what they relied on was the customers or the client's data set. So a company like American Eagle, I always use this example, goes to TTD and says, hey, I want to deploy ads using your software and your infrastructure. They said, sure, no problem. Upload your first party data, right? They do that, and then they identify these customers, and they're able to help with retention of those customers and growing that product in that sense, selling to an audience they already have. Or they use a plugin to collect third party data from a third party source. Now, this is much weaker accuracy than first party data. And third party data is like, here's a group of 100 people. We think with a high degree of likelihood, maybe medium degree of likelihood, that this audience of 100 people would be receptive to your product. It's not a guarantee. It's sort of like, a shot in the dark in a general direction that you think is okay and adequate. Where Zeta is able to say, I know this person with a 95 degree, likelihood or percent chance that they will buy this product if we show them it at this specific time, at this vector, on this specific platform. That is a complete different echelon of company. And that's the difference between first party and third party data. And that's why Zeta won't ever have a moment like TTD, because they own first party data. And if you own the first party data, you have an inherent advantage, even with AI.
Yeah.
And I know that, I'm getting into the technical weeds here, and this kind of turned into a Zeta show all of a sudden. I come on at lunch and we're like, hey, listen, the Zeta weeds, man.
That's what most people are asking about anyways. So
yeah, is anybody in the comments? Anybody have questions? I know we ranted for quite some time. What are people saying?
Comments went silent. They're just listening to you, I think.
Yeah, I think maybe we bored people. My bad.
Maybe.
My bad.
Who's still there? Anybody out there still? Oh man.
Somebody said, Ronnie, you were not pronouncing Reuters properly. You pronounced it Reuters.
I pronounce it Reuters, like Reuters. What is it? Reuters Lumber Liquidators or something. Hilarious. Yes, I am now more inclined into opening position. Great work to the both of you. Appreciate it. Yeah, man. I mean, everybody's got to do what they got to do. You gotta play your own game. You can only borrow so much conviction until it runs out. Like, you borrow conviction, people borrowed conviction up at buying at 22, 23, 24. Guess what? All those people, most of them probably sold or are selling, because now we're down to 17. They're way down psychologically and unrealized from their gain or from their entry point. You need the conviction. We're trying to help you understand the company and why it's so undervalued, why it's such a great opportunity. But you can lead a horse to water, but you can't make it drink, So yeah. 6-month short-term price target. There's so many variables in that, honestly. Like, yeah. I personally believe we see a pullback correction level-esque, like 2025 fiasco here soon, and then we bottom like April, May, same thing, and then rip into year end. So that one's tough, But again, just because there's a correction doesn't mean stocks can't go up or go down less. Like, this is what I think. Like, if Zeta comes out and crushes it and they go profitable, I think they'll move above 20. And I think even with a correction or crash, I don't think they move back below 18 again. I feel like it'd be really, really tough. So, yeah. And we didn't even talk about like, I think Zeta has downside, a cap downside as well, because I think there's 1,000,001 companies that would line up to buy them out. I don't want that to happen, but yeah.
Yeah, worst case scenario, Zeta gets bought out, which I think is highly unlikely, but just given the current circumstances, you got to remember, this is a company that in the Forrester report, and it's also, there was another one, I forget the name of the company, but these are third-party technological sort of analyst and studies companies. And essentially what they do is they go in and they do comparative studies of technology and capabilities of companies in industry to really sort of gauge, okay, who is leading the pack in innovation and technology? And Zeta has led since 2023. So everybody in the industry knows that Zeta is pulling ahead and they're innovating and they're developing technology as superior than everybody in the industry. So obviously, it would make sense why somebody would want to acquire them. Frankly, in Q1 2025, there was interest, and management talked about that on the earnings call in 2025 in Q1. But since then, it's been quiet all on that front, given the leaps and bounds they've made in technological evolution over the last year and a half.
Man, I didn't know that Zeta only paid 250 mil for live intent deal.
Yeah, dude, it was like one of the most underrated and greatest acquisitions, I think, in Martech.
That's essentially, like, in my opinion, that's essentially Facebook acquiring Instagram.
Yeah, really. I mean, it's a massive first party data mill.
Yeah.
That's what it is. And it's just going to continue to grow. It's a really high quality asset, honestly. Well, Ronnie, I'm going to have to head out here. I got to get back to work, but it was great talking with you. We'll have to touch base soon.
Yeah, man, for sure. I appreciate it.
We'll talk soon, guys. Bye.
I'm making a post. Zeta acquiring live intent for 250 mil is the equivalent of Facebook acquiring Instagram. Can you explain why SaaS names are dropping? Is it because of Meta earnings? No, I don't think it's because of Meta earnings. I think it's because of Claudebot. Claudebot came out and they're basically showing that they could do so many things with AI that could replace SaaS names. And everybody thinks that AI will be able to just replace SaaS. Super simple. Ronnie, is Meta buy at these levels? I still like Meta and I still think it's undervalued. I do. Do me a favor, guys. Hit that like button. Subscribe on YouTube so we can get to 5,000 subscribers. And I appreciate it, Nick. Yeah, I'm posting that now. I gotta do a picture of it. Zeta acquiring live intent for 250 million is the equivalent of Facebook acquiring Instagram. How much did Facebook acquire Instagram for? $1 billion. Man, that's crazy. The actual final price was 715 million, so that's not bad. We'll just keep 1 billion because it's easy. Let's see. Facebook, Instagram deal. All right. Sweet, guys. Hit that like button, hit that subscribe button, follow. If you want to go back, 2.5 hours of live stream, we talked about Zeta. We talked about a bunch of companies. We charted companies. We talked about the markets. We talked about a lot, guys. So go back through if you want to rewatch. I appreciate you all. I'm going to go get some lunch. Hope you guys have a great day. We'll be back at it tomorrow. at 3 p.m. No, lunch. We'll be back at it tomorrow for lunch, 11 a.m. 11 a.m. Eastern for lunch. Nick, if you want to join again tomorrow, let me know. But yeah, no problem, guys. All I ask, hit that like button, hit the subscribe button. Let's get to 5,000. Appreciate you all. Roll back through and watch it again if you missed anything. I appreciate it. Hope you guys have a great day. Stay safe.